Dividends. Dividends are a powerful way to build upon wealth and generate passive income. In this video, I will be going over how to calculate your current dividends and dividends for the future. I will also show you guys the site that I use to calculate my dividends and to look for new dividend companies. All right, let's get to it. Welcome to Piece of the Pie with Ty. I'm Ty, and I appreciate you guys coming to check me out. If you like any of the content in this video, please hit that like button, subscribe to the page, and come back and see me. My channel is all about making sure everyone is aware of the different avenues there are out here to get a piece of the pie. So today, what we're going to be talking about is dividends. Dividends are payments a company makes to share its profits with its shareholders. So this is a great way to earn passive income. A lot of people solely just look for dividends. And I showed you guys before that my portfolio is heavily built upon dividends because I want to generate that passive income. You guys should know that dividend investing is a little more on the safe side of investing into the stock market. Without further ado, let's go to the computer so I can show you guys some of the tools that I have been using to help me out with calculating my dividends. Okay guys, so I want to show you guys a few things. You guys know that there are two different types of dividends: qualified dividends and ordinary dividends. Dividends can be classified either as ordinary or qualified. Ordinary dividends are taxable as ordinary income, meaning that whatever tax bracket that you fall into, your ordinary dividends will be taxed the same. Qualified dividends that meet certain requirements are taxed at a lower capital gains rate. That's good information to know. Alright, but of course we're going to get a little deeper into that. I'm on Investopedia, and this what are qualified dividends. This is the tax bracket for qualified dividends. Of course it looks different than ordinary tax bracket, right? So if you are single and you make over this amount, the highest is going to go is 20%. That's great. So if you're generating a lot of income from dividends and it's long-term dividends, it's qualified as long-term capital gains. You'll be in this 20% tax bracket, which is good for anybody that makes a decent amount of money. So the key takeaways from qualified and ordinary dividends are: maximum tax rate for qualified dividends is 20%. For ordinary dividends, in 2019 calendar year, it was 37%. You guys probably like, so what's an ordinary dividend? Ordinary dividends are those dividends that are made by people that are swing trading, and they just so happen to catch it when they were going to be issuing dividends. It won't be qualified as a long-term investment. And I do want to point out one more key takeaway from that Investopedia pointed out. Around this last paragraph, it says what it means for investors. For most everyday investors, the question of whether a dividend will be qualified or not is usually a non-issue. The reason for this is that most regular dividends from U.S. corporations are considered qualified. Nevertheless, of course, it's different for REITs, MLPs. They have their own tax rate. You know, REITs get taxed at a whole different rate. But I do want to add, I'm not a tax advisor. I just wanted to point that out in case you ever heard qualified dividend and ordinary dividend and you didn't know what it was. Just some facts. Now we're going to get to the meat and potatoes of the video. I wanted to show you guys a site that I've been using. I'm going to exit out of that. And it's called Dividend Watch. Okay, so this is Dividend Watch. First, I want to show you guys what it looks like when you look up a stock on Dividend Watch. We're going to look up SPHD. That's my ETF. That's my dividend ETF. I like SBHD. SBHD, Invesco S&P 500 High Dividend Low Volatility ETF. This ETF is meant to have low volatility. Alright, so when we look at this, the first thing that pops up is the dividend yield. And it gives you how much it makes annually. And you got the price of it. And it shows you, because this is Dividend Watch. It's all about dividends. This shows you what it's been doing over the last year. It's been increasing each year. Increasing this dividend each year, which is pretty good. That's what you want to look for. You want to look for a company or a stock that's increasing its dividends. That means it's making money, enough money to give shareholders increase in profits. This is the ETF, so I want to show you guys the actual stock. So everybody know Coke supposed to be one of the best companies for dividends, right? When you go to an actual stock, it looks a little different than the ETF. Of course, the actual stock is going to have the dividend yield just like the other one had. It's going to have payout ratio. So it tells you how much of its earnings is being paid out as dividends. Coke is paying a nice amount of its earnings in dividends, paying out to people. It tells you the cash payout ratio, company debt level. It tells you how much the company is currently in debt. It gives you the PE ratio. It even has a little note what the PE ratio is. Market is offering to pay 24.95 times more for a share than earnings per share. The company's earnings per share. So that's pretty cool, right? It's showing you that the company makes $1.93 per share, and then it's paying out $1.64 to its shareholders. So that's a pretty cool breakdown that you can see. I do want to show you guys right now how to get this dividend yield. I know on a lot of apps they don't have the annual dividend just written out. So I want to show you guys how to calculate this dividend yield. For example, on Robinhood, you're just going to see this percentage, this dividend yield. So when you see this percentage, I don't want you guys to think you're going to get $3.41 a year, because you're actually getting $1.64. So I want you guys to understand this. So how the dividend yield is calculated is the annual pay divided by the current price of the stock. So if you took $1.64 and divided it by 48.15, you will get 3.41%. And you can do this vice versa. So if you don't have what a company is making annually, you can take the company's price, this 48.15, and multiply it by the percentage. Make sure you guys move the decimal point over 2 times. You will get this $1.64. Alright, so that's how you calculate the annual dividend if you don't have it. Or you can just come to an easy site like this so you don't have to do the math. Alright, but that's how you calculate it. It's good stuff to know, at least how to get these numbers. This site breaks things down a little more than Robinhood does on its mobile app. So that's how you look up a stock. Now I'm going to show you guys one of the features that I really like about this site. This is the My Stocks tab. In this tab, you can come and you can add your portfolio to this so it can calculate your dividends in real time. So if you wanted to add one of your holdings, you would come to add transaction and you can just look up a company. So let's say I wanted to say Coke again. You find Coca-Cola, then you type in how many shares of Coke you have. You have 70, and then you just add transaction to portfolio and it will generate on your portfolio. So I have added my portfolio, my personal portfolio, to this, and it has given me a breakdown on how you are diversifying. It shows you your dividend yield on your portfolio value. I wasn't able to add all of the holdings in my portfolio. That's why this number is lower than the ones you guys just saw in my game winning. But again, Some of the holdings in my portfolio didn't give dividends, so it really wasn't a need to put them up here to calculate my dividends. Yield cost, dividend income so far for the year, and my yearly dividend income. So it already tracks how much in dividends I'm going to be getting over the course of this year, which is pretty good. You don't have to sit down and calculate it yourself. I'm just going down showing you guys that I added all of my holdings and how many shares I had in there. And this is my portfolio right here. And then you come down, it shows you your last payout. I got a lot of dividends at the beginning of this year, so I'm not sure how accurate this is, but from now on it's going to be spot on. So it'll tell me how much money I'll be receiving each month in dividends. And then when we go to open calculator, you can have your personal portfolio. You can set your dividend growth annually, but because I have already put in the actual stocks I have, they already averaged out how much they will grow in dividends. For example, it has that Cisco grows 11.8% on average. SPHD grows at 4.64. And where's Coke? Coke, you see their dividend growth isn't that high, and it's only 2.53. But yeah, you guys can see everyone's dividend growth. You can see who had some deduction in their dividend growth, like the airlines. You guys can see Delta was hit, so of course they subtracted their dividends over the last year. So did their restaurants, because you know COVID had everything shut down. AMC, of course, you guys know that had everything shut down during COVID. So it's good to see it averages out what the dividends would be, and you can actually see which companies will give you that dividend growth. So if you really want to get deep into dividends, this site is great for that, because it shows you the dividend growth, the average dividend growth of each company. Then of course you can pick the stock price growth. I'm gonna leave it at 5% just to be conservative, but typically they say the average stock usually grows 10% a year, typically. But I'm gonna just leave it at 5%. And then reinvesting. Everybody should know what reinvesting is. Reinvesting is how you compound. Compounding is when interest or dividends are reinvested and add to what's already there. So that's what compounding means. It's just you reinvesting your dividends back into the company, and that really helps you out. And you guys are going to see that once we calculate this up. So you can add additional investments. So if you want to say you're going to add, I said $100 a week for me, so I'm going to add $400 a month to my portfolio. Dividend income tax, we're not going to mess with that yet. And then select time frame, 3 years. So it's about to show you my dividend income over 3 years if I keep it how it is and I reinvest. No, first let's see if I don't reinvest anything. So in 3 years, 2024, I will get $601 a year in income from my dividends. $601 if I don't reinvest. Now if I reinvest, calculate, it's going to be $629. Okay, so that's just a quick breakdown. And then of course we can go out to the 10-year plan. Calculate. So in 10 years, if I keep this strategy up, my dividend return could be $2,886. That's in dividends. That's how much I will be receiving for having those stocks. And it even if you come up here, you can see if I keep this track for 10 years, how much my stocks would be worth. So this is great for a long-term investor like myself. I don't plan on selling anything no time soon, and I'm in them for dividends. So if I keep everything I have in my portfolio and I just keep reinvesting, I can have $91,000 in 10 years just sitting in the account, and I could be making $2,886 just by it sitting there. That's pretty good. This site really gives you a lot of information as it pertains to dividends. Alright, so now we're going to get off my portfolio and let me show you guys if you went hard on one dividend stock. Again, we're going to go back to SPHD. Again, I like it. I like that stock. Okay, so we're going to go to SPHD. I just want to show you guys the power of a dividend stock. If you ever get your account, any account to like $500,000, like your retirement account, and you want to put $500,000 in there, because I mean your retirement is going to get to the point where you generate millions. That's your retirement. It should get there. You're at least in the middle to retire in your account. So let's say you want to put $500,000 in there. That's about $500,000. Calculate. So at $500,000, you still are making $22,000 a year, $27,000 a year, and it's going up. And if you hit reinvest on that $500,000, calculate that 3 years, it's growing for you to the point that you're making $40,000 a year. Passive income. Passive income is key, especially if anybody ever get a hold of a big bag. Please invest some money in dividend stock so you can have something coming back to you. And I'm using SPHD, but SPHD isn't the only ETF out there. Alright, there are plenty more. And the last thing I want to show you guys, on the first page that we were on, they have dividend stock lists. Alright, they got the dividend stock list broken down. They have premium ones, blue chip stocks that give you the best dividends, high dividend yields, the highest paying dividends, S&P 500 dividend stock. So this is the blue chip dividend stock. So it's part of their premium list, stock list, but you can go through and see each dividend company by sector, price, their dividend payout ratio, dividend yield, and these are blue chip stocks. So, you know, you wonder how some people know what dividend stocks are the highest. Look at this. You can go through, pick the sector that you want, and you can see the dividend stocks that's blue chip stocks. Blue chip stocks. You know, that means top of the top. Then if you want the dividend that pay the highest yield and highest growth, go to highest yield, highest growth. Of course, with the premium stock list, you guys have to pay, but I'm showing you guys now. You know, some of the picks out here that pay the most. Pay the most. Of course, they got some that, you know, are in different countries, so you can't get into these. But yeah, highest paying dividends with the highest growth. So some people want that growth and high yield. This site, Dividend Watch, breaks it down for you. And you can go with the safest of the safe companies. You know, small cap dividends, high yield. And everybody know what a dividend aristocrat is. Dividend aristocrat, they have been increasing the dividend payouts for the last 25 years. But did you know you have dividend kings? Dividend kings are titles with over 50 years of consecutive dividend increases, making them very reliable as dividend payers. And then you got the zombies. Dividend zombies are the first stocks to look for when you want higher yields and dividend safety. So zombies have earned that title because they have paid consecutive dividends and increase for 100 years. So again, how we had that analogy about you got $500,000 or $1 million, you want to put it in a company that's safe, right? You can't get any safer than a zombie or a dividend king. So this site is very helpful for anyone that's looking for dividend stocks. And I just really wanted to share it with you guys because I ran across it and yeah, I'm using it. I really like Dividend Watch. So let me know what you guys think. Okay guys, that was a quick run through on some of the tools that I have been using to help me out with calculating the dividends in my portfolio and planning for my future dividends. If you are interested in dividends, make sure you use Dividend Watch. They definitely have a lot of insights on dividends since their site is solely for dividends. And you can really see some of the better companies for you. You can even just focus on dividends and spread yourself out through each sector. Just focus on dividends. It's just a few things that maybe you guys should check out. If you want to learn more about dividends, check in the description on this video. I have the link to a book that I have read myself and it was very helpful in the description. Also, if you want to discuss anything about dividends or just stocks in general, in the description is also the link to the Facebook group where we discuss everything dealing with investing. Anybody is welcome. If you like any of the content in this video, please hit that like button. It helps other investors find this video just like you did. Subscribe to the page and come back and see me. I appreciate everybody taking the time out their day to watch this video. I really appreciate it. And come back and see me. I got plenty more to talk about. Thanks.